Hello. Let's talk about what steps accountants have to take to compute net pay. Following our discussions of gross pay computations in Chapter 3 and fringe benefits in Chapter 4, it's now important to compute net pay. Net pay is the amount the employee receives after all deductions are subtracted. It's also known as take-home pay. The deductions fall into three categories. There's mandatory deductions, which include federal, state, and local taxes, mandated deductions, which are ordered by a third party, such as garnishments or union dues, and then there are voluntary deductions, which include insurance, retirement, charitable contributions, and other like deductions. So these are the steps you have to take to compute employee net pay. We start with the employee's gross pay, and in our example, that's $1,000. Then we subtract the pre-tax deductions to get to the taxable earnings. In our case, the pre-tax deductions are $300. That leaves us with taxable wages of $700. This is a simplified example since some pre-tax deductions reduce gross income for both income taxes as well as FICA, whereas other pre-tax deductions only reduce gross income for income taxes. So for instance, the Section 125 or cafeteria deduction reduces gross income for both income taxes as well as FICA, whereas the 401k reduction reduced gross income for income taxes only. Next, we compute the taxes to be withheld from the total taxable earnings and deduct the taxes, which is $103.55 in our example. Finally, we deduct any other voluntary or mandated deductions, which is $50 in our example. The result is the employee's net pay of $635.45. Let's look at this detailed example together. Mackenzie is a full-time employee in Austin, Texas, who earns $4,430 per month and is paid semi-monthly. He's married, filing jointly with one dependent under 17, and has indicated Step 2 checkbox withholding. She has a qualified health insurance deduction of $50 per pay period and contributes 3% to her 401k, both of which are pre-tax deductions. Her additional withholding amount for Step 2 is $150.75. What is her net pay? And a note here, we need to use the wage bracket table. We start with the gross pay calculation by dividing the monthly salary by 2 to get the semi-monthly wages of $2,215. We deduct the pre-tax deductions, which we're told is medical insurance for $50 and 3% for the 401k, which is $66.45. So once we deduct the pre-tax deductions from the gross pay, the result is taxable earnings of $2,098.55 for federal taxes and $2,165 for purposes of calculating FICA. And how do you calculate the federal taxes? You go to either Appendix C of your textbook, which shows the tax table for the semi-monthly payroll, which we have here as well. You find the amount of $2,098.55 in that tax table. Why are we looking for $2,098.55? Well, that's the taxable earnings amount. In the problem, we were told Mackenzie is married filing jointly, so we need to look in those columns in the tax tables, and we were told that the checkbox in Step 2C was checked. That tells us that we need the second column withholding amount, which is $177. But we're not finished yet. Mackenzie also has one dependent under 17, for which she's entitled to a reduction on her income tax of $2,000 per year. We need to divide the $2,000 by 24 to get the amount per paycheck, which is $83.33 for a tax amount of $93.67, plus the additional withholdings of $150.75, for a total of $244.42 for the federal tax withholding. But very important, the amount that remains after deducting the dependent deductions cannot be negative. So if the dependent deduction is greater than the tax that you looked up in the table, the net amount is reduced to zero. You'll see that in the next example. The next step is to calculate the Social Security tax, which is 6.2%, and the Medicare tax, which is 1.45%, on the FICA taxable wages of $2,165, which results in $165.62. Once we subtract all of the deductions of $410.04, we arrive at the net pay of $1,688.51. Let's look at this next example using the percentage method. Stephen is a full-time exempt employee in Little Rock, Arkansas, where his state tax rate is 5.9%. He earns $45,850 annually and is paid semi-monthly. He's indicated that he's married with 2 dependents under the age of 17 on his 2022 Form W-4. He has checked the box on step 2 of his Form W-4 and has $75 additional income tax per pay period. His pre-tax health insurance is $100 per pay period. Stephen also contributes 5% of his pay to his 401k. Assuming that he has no other deductions, what is Stephen's net pay for the period? Step 1 is calculating the gross pay by dividing the annual salary by 24 because Stephen is paid semi-monthly, which results in $1,910.42. Step 2 is to calculate the taxable wages for federal taxes, which means we subtract all pre-tax deductions for health insurance of $100 and 401k, which is 5% or $95.52. That gives us taxable wages for federal taxes of $1,714.90. We also need to calculate the taxable wages for FICA, which means that we only deduct the health insurance in our example from the gross wages, which then results in $1,810.42. So now we're ready in step 3 to calculate the federal taxes. We do that by looking up $1,714.90 in the percentage table of married filing jointly, box 2 checked, and the semi-monthly payroll period. The third row includes our taxable wage amount of $1,714.90, and we complete the calculation by subtracting $968 from the table from the taxable wage of for $746.90. And then multiply that amount by 12%, which results in $89.63, to which we add the tentative amount of $42.80 from the table for a total of $132.43. Next, we calculate the dependent deduction by multiplying the 2 dependents less than 17 times the $2,000 per year, and then divide the amount by 24 to obtain the semi-monthly amount, which is $153.85. Now, super important, the net amount after subtracting the dependent deductions from the taxes cannot be negative. In our case, it is because $132.43 minus $153.85 is a negative $21.42. So we change any negative amount to 0, but we still add any additional tax amount, which in this example is $75. So after all our calculations, the federal tax withholding is $75. Okay, now we're ready to calculate the state taxes of 5.9% of $1,714.90, which is $100.18, and FICA, which is 7.65% of $1,810.42, because that's the FICA taxable wages, which results in $138.50. You'll learn more in the coming week about state tax deductions and FICA calculations, but I wanted to provide you with an end-to-end calculation for this week. So the final step is to calculate the net pay, which is $1,400.22. There's still one other topic to cover, which is grossed up pay. Have you ever heard of grossed up pay? Well, sometimes employers wish to give an employee a specific amount as their net pay. Since taxes cannot be omitted, the term for this practice is grossing up. This means that the net pay is increased so that the effect of the deductions are part of the computation. The desired net pay is divided by 100% minus the total tax rate, which includes all government taxes. If the amount to be paid is a bonus, then the federal income tax must be computed at 22%. Typically, bonuses do not have insurance, 401k, or any other voluntary deductions withheld from them. So let's look at this example. Sawyer is an employee for Pacifica Enterprises located in the state of Washington, and the firm's president wants to give Sawyer a $150 bonus at the end of the year as a reward. We would use the following steps to calculate the gross amount. So first we calculate the federal income tax and FICA. The tax rate on bonuses is 22%, and FICA is 6.2% for Social Security and 1.45% for Medicare. So the total of the percentages is 29.65%. If there's a state tax, you'd add that amount as well. To calculate the gross amount, you would divide the net amount of $150 by 70.35%, which is 100 minus the 29.65%. So, which is then $213.22. Hope this was helpful. See you soon.